Hello and welcome to this video on the advantages and disadvantages of trading with a Forex prop firm. If you're a trader looking to expand your horizons, you may have heard of prop firms and wondered how they compare to trading with your own capital or a traditional broker. In this video, we will explore the benefits and drawbacks of trading with a Forex prop firm, so you can make an informed decision about whether this is the right option for you. Forex prop firms are a relatively new phenomenon in the trading world. Unlike traditional brokers, prop firms offer traders the opportunity to trade with borrowed capital in exchange for a share of the profits. This can be an attractive option for traders who want to access greater capital and potentially higher profits, without the high costs and risks of trading with their own money. However, there are also potential drawbacks to trading with a prop firm that you should be aware of. Advantages of trading with a Forex prop firm. One of the main advantages of trading with a Forex prop firm is the access to greater capital. Many prop firms offer traders the opportunity to trade with significant amounts of capital, sometimes in the millions of dollars. This can give traders the ability to take larger positions and potentially earn higher profits than they would be able to with their own capital. Another advantage of trading with a prop firm is the potential for lower costs. Unlike traditional brokers, who may charge high fees and commissions, prop firms often have lower costs for traders. This can make it easier for traders to earn a profit, especially if they are trading with borrowed capital. Finally, trading with a Forex prop firm can provide valuable experience and training for traders. Many prop firms offer training and mentoring programs for their traders, which can help them develop their skills and strategies. This can be especially valuable for novice traders who are just starting out in the world of Forex trading. Disadvantages of trading with a Forex prop firm. However, there are also potential drawbacks to trading with a Forex prop firm that you should be aware of. One of the main drawbacks is the potential risks involved in trading with borrowed money. When you trade with a prop firm, you are essentially borrowing capital to trade with, and if you are not successful, you may be responsible for repaying the firm. This can be a significant risk, especially if you are not an experienced trader or if you are trading with a large amount of borrowed capital. Another potential disadvantage of trading with a prop firm is the restrictions on trading that may be imposed by the firm. Many prop firms have strict rules and guidelines for their traders, which can limit the types of trades they can make and the amount of leverage they can use. This can be frustrating for traders who are used to having more freedom in their trading strategies. Finally, it is important to note that not all prop firms